is going to be discussing the CARES Act and the impact on your hospice. A little thing about Amy is that she oversees a Knight CPA Group, and it's an entire operation. She's the president and champion of Vision. She focuses on client relations, business development, and IT incentives there. And they offer a complete back office solution to the home health, hospice, and nursing facility industries. So Amy's been doing this for a very long time, and she is an expert in the field. All right, Amy, you ready?
I am, yeah, and I'm just trying to make sure. I've got one gentleman that asked for a dial-in. Okay, it looks like he's got it. Okay, a phone dial-in, because I couldn't find one. Hi, everybody. Yes, this is what we do. We do home health, hospice, nursing homes, and assisted living facility. We do accounting, cost reporting, tax, that kind of stuff. So it was kind of funny, you know, so I've been eating, breathing, sleeping, dreaming, waking up, all of this CARES Act, everything going on with COVID-19. And we had a friend stop by last night, social distance the best we could. Anyways, and he proceeded to tell me about it. And I'm like, you are preaching to the choir. I know all about this stuff right now. So anyways, let's jump in. I will be very honest. Somebody asked for these slides ahead of time, one of my colleagues, and I said I'm happy to send them to you. I did not update them today because today is different than yesterday. And so I left them the way they are. They've got a lot of detail about this Paycheck protection program. And that's the loan that has the forgiveness piece. And that's the one that is all up in the air right now. It ran out of funding. I left all of the details in here that I have. I tend to write my slides with a lot of details because I want you to be able to have them and not have to rewatch the video, right? So I put kind of a lot of meat in them. I will send them out when we're done. I'll print them to PDF and send them to everybody. It usually takes me about 2 days. I also send a link to the YouTube video. So we'll record this and post it up on our YouTube channel, and so you can refer back to it at any time. So we're going to go through we're going to use our acronyms. PPP. That's the one with the forgiveness. We're also going to touch on this EIDL loan, which is also kind of paused right now, but it's different. It's for a different purpose. I want to also mention these accelerated/advanced Medicare payments. This is nothing new. However, they've expanded it to give you authorization to request it right now. And then what the hot topic is right now that I do want to save ample time for is the provider relief funds. I think a lot of you may have gotten paid today on this, and so we'll kind of talk about that. If you've got some mysterious deposit in your bank account, chances are that's what it is. If you got the PPP loan, you're going to know it's the PPP loan. It's going to come from your bank. If you got a mysterious check that says stimulus payment, that's what this is. There are strings attached, contrary to what the administrator of CMS claims. And so we'll get into that. So just diving right in. And as far as questions go, if everybody could put their questions in the actual Q&A box, the Q&A panel, and if you look at your little Zoom toolbar, there's one that says Q&A. And if you'll put them there, it keeps it organized for me. Chat does not work very well for questions, so I won't be looking there for questions. And then what I'll do is answer. I'm going to go through this. We've got an hour and a half scheduled. My Zoom platform will not shut down. I can stay on as long as you need. My next meeting, I think, is at 2:15, so I've got until then. And I'll answer questions until there are no more questions to answer. And then we'll just keep going from there. Okay, so this payroll protection program, this is the one that everybody got real excited about in the beginning, and now it's kind of fizzled because they ran out of funds. This is the one that there were $349 billion set aside for small businesses. There's a lot of catch there in that word small businesses. One of the news articles this morning was that Ruth Chris, the steakhouse restaurant chain, and I don't even know how many thousand employees they have, they qualified. Well, part of this program is that they included the hospitality and restaurant industry. So food service and hospitality is how it reads, to cover restaurants and hotel chains, no matter their size. So Ruth Chris got 20 million of that $349 billion, right? So the design of this program was not so much directed at employers being able to pay payrolls. It was really directed at the employees. They wanted to keep the employees working and not on Social Security. I'm sorry, not so, unemployment, right? Not in the unemployment line. So even if you weren't open, they wanted you to pay your employees or prevent layoffs, what have you. That's the real design of it. They kind of shot themselves in the foot by turning around and adding a whole bunch of money to the weekly unemployment checks that they're giving out. So a lot of people are making more money on unemployment and don't want to go back to work. So there's that. But the program, it loans you. So basically they say, we're going to give you 2.5 months worth of your average payroll, and we're going to give you 2 months to spend it. So 250% of your average monthly payroll cost, and you've got 8 weeks to spend it on very specific costs, which is payroll, and then also rent, utilities, and mortgage interest. And we'll get into that a little bit more. If you spend it in that 8 weeks on those specific costs, it can be up to 100% forgiven. Of course, there are strings attached to that, or there are, specifications that have to be met. So again, it's designed for small businesses, which by definition at the SBA are businesses with 500 or fewer employees. Again, they added hospitality and food service, but in that, when you go read the definition, they call it a small business concern at the SBA. I did a little more digging to really dig into this 500 or fewer, because in law and legal things, there's always an exception. So in the digging that I do, and if you fall into this category, if you've got more than 500 employees, you're going to want to consult professional advice apart from what I'm saying in this webinar. But the way I read it is for home health and hospice, based on your NAISC code, it is, if your total revenues are 16.5 million or less, you're still considered a small business. Not sure how many hospices that's really going to impact, but on the home health side, it kind of impacts a lot that are PAS providers, because they can have a lot of employees and not nearly as much revenue. So I think that's partially why it's there. You must have payroll expenses to be considered as payroll. Again, that qualifies for everybody here in our audience. It does also include 501c3s. We don't know, there's still, and one thing I didn't say in the beginning, there is still so much we don't know. There's so much that has not been properly defined and guidance given out. The only real clarification and guidance that's been doled out to us so far has been on the front end, the application process, the qualifications, the calculating of payroll. And they included contract employees, and they included self-employed and contracted individuals. So there's been some clarification in that, but not a lot of other clarification. So 501c3s are included. If you're some other form of nonprofit, again, you're probably going to want to get some legal advice to see if you can find if you are included or not. Must have been in business prior to 2/15. So if you are getting caught and just starting up, I just don't think now's the right time to start a business, even if you had every intention on doing so. I would hold off. Again, I'm going to kind of skip some that I know does not apply to this particular audience. Again, $250,000 of your average monthly payroll cost. Basically for you guys, it's going to cover all of your payroll, except it only includes SUTA tax, your state unemployment, It does not include the rest of your payroll taxes. It does not include your 941 employer match, your Medicare and Social Security taxes. Does not include FUTA. I don't know why. The other catch is it only includes up to $100,000 annually for each employee. So it doesn't mean, okay, you're looking at a snapshot. Yeah, well, I didn't pay him more than $100,000 during that 8-week period. That's not what counts. Did you pay? Is their salary more than $100,000? So you're going to have to remove the excess when you do your calculations. It doesn't include anything over 100,000. They must reside in the U.S., which I think everybody's good there. And then these little clauses are any taxes withheld under these IRS sections. Allowable uses. So what you're allowed to use this money on is payroll cost, as we just defined, any cost for regular paid family medical sick leave, not the extended stuff that came with the CARES Act, but your salaries and everything. But then when you jump down, you see it also includes rent, utilities, interest on any other debt obligations, and mortgage interest if you've got a mortgage on your commercial property. Those are included. So they're saying, look, we're going to give you 2.5 months worth of payroll, but we're only giving you 2 months to spend it. And that math doesn't quite jive. So we're going to let you add some other fixed cost that we know you're going to have to pay even if you're shut down temporarily. So that's kind of why that got included. It can be forgiven up to 100%, including interest. Here's the catch. You must maintain the same level of employees that you had prior to the event, prior to the crisis. Most of the guidance I'm seeing is going off of this 2/15/2020 date. We've worked with a number of different banks, and we found that what we put on the application, which just said number of employees, wasn't the same as what they're really going to use in the loan forgiveness, because when we applied, none of this had been defined. Now they're saying, my best understanding is you're going to take your 215 payroll or whatever payroll covers that period, and you're going to calculate your average FTE, your number of FTEs. So total payroll hours divided by number of hours in that pay period, which is either going to be 80 or maybe 88 hours in that pay period. So you're going to take your total payroll hours paid divided by 80. That's your FTE count. You've got to, by the end of the 8-week period, and even that is still in question, you've got to reestablish that level. You don't have to maintain that level the whole 8 weeks, but by the end, you've got to reestablish it. So if you've had to lay people off, you're going to want to bring them back on in order to get the forgiveness. Let's give an example. If you had 10 employees and by the end you only brought it back to a level of 8, then you've reduced your workforce by 20%. So your forgiveness is going to be reduced by 20%. The other catch, which I don't think is as hard, it's easier to understand anyways, is that every single employee must maintain at least 75% of their normal salary. You cannot reduce anybody more than 25%, and that's even one person. And if you had to do that, you've just got to bring it back up before the end of that period, okay? And this 8-week period is started on the date you get funded from the loan, okay? So you receive your money, the clock starts ticking, you got 8 weeks to spend it, reestablish your employment levels, and reestablish your salary levels. And if you do that, that's how you're going to maximize your loan forgiveness. The key to maximizing that loan forgiveness is going to be planning, execution, documentation, and record keeping. You guys are accustomed to record keeping and documenting everything you do. And I think even now, you know, even on your clinical and your regulatory compliance side, you're bombarded with how much documentation you're doing. And now you're doing even more because it's not clear what you need to do. So you're going over and beyond. You've got to keep that up. And now you've got to apply it to the accounting side. one thing that we are recommending is that if you get one of these loans, you put it in a separate account, bank account, and you spend out of it only what it's covered, only what it covers. That's going to be a good way to help document that you only spend it for those purposes. I am going to take a minute and launch I only have one polling question, and I want to launch it because it talks about this, and I've never done a polling question, so let me see how it works. Okay, I'm launching it now. All right, so if you will comment on this, basically what I'm kind of wondering is, where are you and your agency with regards to this PPP loan? Did you apply for it? Did you get approved? Did you get funded? Did you get stuck out in the rain because you were with a big bank and they shut down applications? Where are you at with this whole thing? And I don't know what, we've got 64 attendees, okay. So we got votes coming in, and we got about 30 seconds left, and then I'll shut it down. And I've never done the polling part, so it's kind of cool. I'll have to try it more often. It's interesting, like all the numbers just keep changing. So we've got about 27 have voted. Again, the first option is you applied, you got approved, and you actually received your funds. The second one is you applied and you've been told you've been approved, but you haven't been funded yet. And the third one is you applied, but you don't even know if you got approved, which is kind of where me and a big chunk of my clients fall in. And then you didn't apply, and then lastly, luckily nobody's voted on this one. You have no idea what I'm talking about, which I guess maybe I should have launched this at the beginning of the discussion. Okay, I'm going to go ahead and shut it down. About 50% voted, and let me see if it gives me results. So 39% have applied and been approved and actually received funds. So that's very encouraging. And then 10% have applied and been approved, but they haven't been funded yet. 29%, you applied and you don't know where you are in the process, which is me and, like I said, a chunk of my clients. And 23% of you did not apply. Okay, cool. Oh, I'm sorry. Look, here's a button that says share results. Okay, so maybe you can see that. I'll stop that share real quick, and we'll just kind of move on. So before, I don't have a, so where my firm is shifting our focus now, because we have submitted a lot of applications, and what we know is the big banks failed us, and I'm not one to bite my tongue very well, and I really think the big banks failed us on this. I don't know of any funding from Wells Fargo, Bank of America, or Chase to any of my clients, or any clients in kind of my affiliate of some CPA firms. I work with just friends, right? We've been comparing notes. The only ones that I was able to get actually processed and funded were those that went through small local banks. And so I'll touch on that a little bit more here at the end of our presentation, but it's pretty sad, in my opinion, that the big banks didn't come through for us. And I don't know, maybe they've processed a lot, approved a lot, and we just weren't part of that batch. I don't know. So how do you apply for loan forgiveness? Honestly, like details, we don't know yet. There's no talk about that. There's no real talk about what the record keeping needs to look like. There's a lot of questions about, you know, do you need to keep a separate bank account? We don't know a lot of those answers yet. So we're being very, very conservative, and we are advising to go to the extreme of documentation, because we want to make sure that that we do everything we can to enhance the possibility of forgiveness. We don't want the government coming back and changing their mind and saying, hey, you know, we've changed our minds, which they've done in this law so far. In the beginning, contract labor was included in your payroll cost. It no longer is. So they can change their minds, so we're worried. So we're trying to really, really cover ourselves to make sure we document everything. So you want to really have clean records that prove you spent those funds on those expenses. And as we go, you're going to see how this gets even more critical with more funding programs added into the mix. There's a very real possibility that you won't get 100% forgiveness. So what happens if it doesn't get 100% forgiven because you couldn't get back up to your normal level of employment or any other reason, or you just couldn't spend it all, right? Well, that's why planning is going to be so important. One thing is going to be, okay, I was making sure my audio didn't drop out. One thing is going to be, if you can't spend it all, because we are very payroll labor, our labor cost in home hospice is a huge chunk of your cost. And so the way the math works out, even at 100% employment levels and salary levels, you may still have a hard time meeting those spending requirements. If that's the case, there is nothing that says you cannot give out some bonuses. That's what I would recommend, right? You got your frontline workers, give out some bonuses. That'll help you meet that forgiveness level. Again, if you don't spend it all, or it's not all forgiven, even if you do spend it, but it's not all forgiven for whatever reason, you have a couple of options. You can pay it back at any time. There's no penalty for paying it back. Some people are very adverse to having any kind of debt. Understandable, not a big deal. Just write a check straight back to the bank and pay it off. If you don't mind having debt and you want that money and you don't want to have to pay it back, the loan is a loan to start with. So the day you sign all your documents, you are signing a promissory note that is 2 years from that date at 1% interest. So that's your loan. You're not going to have any payments due for 6 months, but you're going to accrue interest, and you're going to have forgiveness of principal and interest, depending on how your math all works out. And whatever's left over and not forgiven will just stay on that note, and then you'll start making your payments. Or again, you can just pay it all back if you don't want the debt. So next option that we have is that there is this economic injury disaster loan and a grant. We're calling this the EIDL loan. These EIDL loans, these are not new. This is a regular part of the SBA program. They've just opened it up because it was declared a national disaster. It opens it up to everybody. Everybody was affected. And so these are true loans to help businesses out. They are not eligible for forgiveness. They can be up to $2 million. Principal and interest is deferred for 6 months. And this is a little bit worded funky, the term is a 4-year note. So 4 years at 3.75% interest is kind of what you're looking at. And it is available to pay expenses that aren't covered by another program. Okay, so you got to be real careful here. So it's supposed to be for expenses that were incurred because of the disaster, or to replace revenue lost because of the disaster. However, if you've got a PPP loan and an EIDL loan, they cannot be used for the same purpose. So in a planning situation, your PPP loan will be for payroll, rent, utilities, and your EIDL loan would be for payroll taxes, contract labor, mileage, supplies, and everything else that's been increased because of all your additional PPP, protective equipment, any software. But again, there's another piece of funding that you guys are getting that's really designed for some of that. So there's many pieces here, and we're just going to keep going through them. And it's very confusing, and I understand that. This loan comes with this, what they're calling it a grant or an advance. In the beginning, it was saying up to a $10,000 advance for small businesses harmed by COVID-19. And this is done directly through the SBA. It's not done through a bank. The PPP, you do have to go through your bank to get, or a bank, or a SBA lender, but not the SBA directly. So the EIDL loan comes from SBA directly. You go online to apply. They are not currently taking applications because all the funds have been extinguished. But you went on and you filled it out, and it only asked for a couple of numbers. So it was not a true application. It was more of a inquiry of interest. You know, hey, I would like to apply for this. Please contact me, kind of thing, right? And then at the end it said, do you want a $10,000 advance? And you said, well, yes, I do. And you gave it your bank info, direct deposit. And then we all just sat and wondered, okay, what happens? We have seen a few of these get funded only within the last few days. And what they changed it to is $1,000 per employee up to $10,000. This advance does not have to be paid back under any circumstance, whether you get declined for the loan or you just don't even take the loan. You don't have to pay back whatever advance you get. However, if you got a PPP loan, the advance amount that you received will be used to offset the amount forgiven in the PPP. So let's just say you get a PPP loan, it's $100,000, you've met all of your requirements, you got $100,000 fully forgiven, but you also got $10,000 from this EIDL. It's going to reduce your forgiveness, so only $90,000 is going to be forgiven. But really, in totality, you received $110,000, and $100 of it's being forgiven. You're going to have to pay back $10,000, but it's on the PPP side, so it's going to be at a 2%. I'm sorry, 2-year 1% loan, right? So that's kind of how that's going to work. I like to see, like, as of 4/16, we had heard of 0 of those advances flowing, and that was yesterday morning. And since then, I've heard of about 5 of them so far. So it has kind of moved a little bit. Okay, accelerated payments. I definitely want to mention this. There is $100 billion set aside in relief in the CARES Act that is separate from this. This accelerated payment has always been there, but it's in case of dire emergency, maybe Hurricane Harvey or something drastic happened, and there's a situation where you need an advance on your payments, and that's all this is. So what CMS has come out and said is, we will advance you 100% of 3 months worth of Medicare reimbursement. They're going to take your prior 3 months, total it up and give it to you in one chunk payment. You apply for this through your intermediary, and you apply for this through your intermediary. So around here it would be Palmetto, your MAC. I'm not used to the new terminology. It's been around for a while. I still call them intermediaries. So Palmetto is who you would apply through, and it's on their website. It's very easy to find, and it's a form, and they have 7 days to review it, approve it, and fund you, and that's 7 calendar days. So you're talking a week turnaround. I do have clients that have done this and have received it. Here is my caution. This is going to be 100% recouped, 100% after 120 days. They're not going to recoup 10% over a year. They're going to recoup 100% right away. So you need to plan out, what are you going to do in 4 months when your revenue gets turned off, because they're going to recoup this. So they're going to give themselves between day 120 and day 210, it's got to all be paid back. And if you have lost enough business that during that period, you're not at what you were 3 months prior, and so let's say you get $1 million advance, but revenue is cut in half, and so now your 3 months of revenue is only $500,000. They're going to expect you to stroke a check for the other half of it that wasn't recouped out of your reimbursement. So I really caution against this unless it is your last resort. And if you do this, you need to just really, really understand what you're getting into and really figure out how to plan it. And don't use it to pay taxes that you owed, whatever your situation is. Just be very careful with this. Again, I think it's super slippery slope. It's not to say don't use it, and I know I'm being over dramatic. I've been accused of that before. I worry about it. So this one, the Provider Relief Fund stimulus payments, this is what started hitting the bank last Friday. And it kind of makes me wonder if this is a Friday thing. Because I'm pretty sure it was last Friday that it all, and maybe it was Monday. I'm sorry, I can't, the days all run together. But it kind of caught us all off guard because I don't know if this is just so far down in the 880 pages of the CARES Act that we just didn't get to it, but nobody was really prepared for this. And basically they've set aside that 100 billion, 100 billion in provider relief funds. They've doled out, this is the first round is, I think it's 30 billion. And basically what they're doing is all fee-for-service providers, which covers hospice. They're giving you a proportionate share. So whatever you billed Medicare in 2019, whatever percent of the total Medicare funds dispersed to all fee-for-service providers, you're getting that tiny percent of the $30 billion, okay? This is showing up in your bank accounts. I already had multiple emails today. Hey, I got this money. I don't know what it is. I had one provider say, hey, I got this money and I didn't ask CMS for any money, so I don't want their money because I know there's a catch here. And there is. This is the one that the administrator of CMS, Seema Burma, came on and put out. I don't know if it was a Twitter or if it was an interview. And she said, we're doing what we can to help the providers, and this is a no strings attached payment. This is not true. It doesn't have to be paid back necessarily, but there are strings attached. You're going to receive an email, and they recently just today opened up the portal for you to then turn around and go sign your terms and conditions for this money. You need to read those terms and conditions very, very closely. I don't think I quoted them here. I quoted this one. They're restricting how the money can be used. And there's even a further restriction in here that I don't have quoted, but it says it's meant for any provider that is treating, preventing, like you're related to COVID in some way with your treatment. You've got a patient that is either positive for it or assumed positive. So you've got to really be careful, because I've got providers saying, well, we don't have any COVID-19 patients that we're seeing. And we don't know yet how that all works. This is just a big view. I think you're all going to be qualified for the money, because I think you're all on the front line and you're being risked to exposure, right? You're not a cosmetic surgery center that you're being shut down because you're non-essential. You're essential workers, and you're working with the population that's being impacted the most. So I think that there needs to be more research. However, let's just assume everybody is even qualified to receive the money, because they're sending it whether you're qualified or not. But it's got to be used to prevent, prepare for, or respond to coronavirus, and shall reimburse the recipient you only for healthcare related expenses or lost revenues attributable to coronavirus. And it doesn't stop there. It also requires reporting if you've received more than $150,000 total from all programs. This is where this catch is coming into some of that other money. And it's got me kind of really ruffled. These terms and conditions are serious. We've spent some time researching them. We've looked up some of the code sections that they reference. We've got more information about that. You're going to want to get guidance on this before you go spending that money. What it's allowed for is not clearly defined. My interpretation is it does say it's got to be expenses directly related to incurred because of coronavirus. Okay, so I'm going to take that a little step further. I'm telling you, you need to get professional advice on this, right? Legal, accounting, whatever. Well, that's an additional expense. To me, it's related to coronavirus. I think that's fair game. All of your additional PPE, any additional software charges because of telehealth, any computers being placed in homes, or in even in staff homes so they can work from home, any staff equipment. I know with my staff, you know, we were already pretty much set up to work remotely, but luckily I just have a plethora of monitors. But had I needed to buy additional monitors, because my team needs to be able to have at least 2 monitors on their desk, even at home, to be effective. You know, that would have been kind of a qualified expense. Obviously, I'm not a healthcare provider. I'm just giving examples. So I think professional fees that have increased, software fees, hardware fees. If you've got to, you know, and then so those are what you could call hard cost, very tangible, hard, direct cost. But what about the soft cost? What about your time sitting here listening to this webinar, doing the research, applying for loans, figuring it all out, watching your revenue, watching your, you know, your discharges, and you're dealing with all of it that you wouldn't be normally dealing with. I mean, so like a portion of your salary is attributable to all of this, and overtime that you might be paying. It's crazy what can be. But how do you prove it, and how do you document it? Do you need yet another bank account for this money? That's the direction we're going. I don't know yet. This one to me is the scariest. It's the one that showed up without anybody asking for it, and that's the one that's got me the most walking on treadmill. You know, just careful. So what do we know now? The PPP loans, and the EIDL loans are both suspended right now. The appropriations are gone. The government is trying to add more. They're trying to add another $250 billion to the pot. There are some banks that are still taking applications and like getting them all ready. And then that way they can just submit it if it opens back up. And then there are some banks that are not taking them at all. Again, I mentioned, I think big banks move very, very slow. I don't want to be political or even give you my personal insight, but it makes me wonder, did they service their large clients first? Because I think it was definitely one of the big banks. I don't want to throw anybody's name under the bus because I can't remember, that funded Ruth Chris, right? So they funded some people. We had far more success with anybody that, even if they started with a big lender, because I had an SBA lender saying, oh, we can process these faster than anybody because we're a technology company. Well, because they were only using technology to do it, that they failed. The banks that were successful did it manually. And so we redirected a lot of clients. And so clients that I have that we applied through this big lender, this big technology lender, but we didn't get anything. We didn't even get any communication. I'm telling them, you need to go talk to your bank, even if it's Bank of America. You bank somewhere. Go talk to your bank and see if they're going to open up on round 2. We're all expecting a second round of funding. We don't expect it before next week by any means. I heard a rumor that there might be some stipulations which would benefit you guys, in that they might put some stipulations of like healthcare providers, like not every single business, but maybe segment it down to specifics. And I saw healthcare providers, if I don't want to say it wrong, but if they restrict it to those that are in a really critical need and are essential businesses, that might really help. It might help your chances of actually getting some of the money. Documentation is required by all lenders for these loans, and that varies greatly, although it's generally about the same stuff. Again, just work with your banker, see what they want, get with a professional if you need help calculating it, pulling it all together. We've helped a lot of people by taking the burden and just doing it all, getting it ready for them. And then once it's funded, what we really know now is that's when the real work begins, right? That planning and execution of the plan is very, very critical. What I want to caution you against, especially if you've got that money, is don't just go business as normal. You really need to plan it out to make sure you can spend it. And if you don't, that way, because when the 8 weeks is over, on week 9, you can't make up for what you didn't spend. So there's just a planning opportunity there. The provider relief fund terms and conditions, insert, I didn't even mention, I'm so sorry, on that reporting requirement, with that money, you are required 10 days after the close of the quarter to report how you spent that money that quarter. I don't even know how to do that within 10 days. I mean, I'm like in shock. They expect that money to last you a while because they're talking about reporting for multiple quarters. This is not going to be 8 weeks and you get to spend it all. It's also not money to spend to pay back taxes that you owed from 2012 or 18 or whatever it might be. Managing these funding sources separately is going to be an accounting nightmare. We're already experiencing that. You've got to figure out how to prove that those funds were spent on those sources. You can't just put it all into one pot and prove anything. Again, I think I've kind of beaten that one to death. And it's all got to be done now, but yet we have no guidance on exactly what they want or how to do it. I don't know. We don't know. Again, you want to fully understand the programs that you've applied for. I know that it's very confusing, but you as a provider, and like me for my clients, I'm trying to do the very best I can and educate them, but really you, the provider, it is your job to know this and learn it and understand it. I'm here to help, but you've got to understand it as well because you're ultimately responsible for it. We're doing everything we can to help and answer questions. One thing you want to watch out for on your accounting is you've got COVID reporting compliance. Well, you've also got cost reporting compliance and income tax compliance. Those are not all the same. They don't all work the same. You got to make sure that's all dialed in. So we're here to help. Again, I will follow up with sending out slides and a link to the webinar, but I've only got a few questions. So let me go through them and see if it opens up any more questions. Okay, it says you mentioned that one person's pay can decrease more than 25% after 215. Some personnel's pay will decrease because visits are denied being held. Are you saying this will cause us not to meet the requirements? So you guys are correct. This is a very interesting market that we're in. And so how do you define a PRN staff person's wages? So because the way I read this question, it's talking about maybe somebody that's PRN because it says they're going to decrease visits, right? Visits are decreasing. So therefore we're going to decrease how much we pay them. If you're going to be in trouble on the salaried people, if they're salaried, you've got to keep that salary steady. However, on the PRN and the per visit people, you're still paying them the same amount per visit. You're paying less visits. We don't know how that's going to shake out. I feel like there's an argument to be made that we still paid them the same hourly rate. We just couldn't pay them as much. Is that argument going to fly? I don't know. Really, I'm afraid that we're not going to like the answer. And I go back to why I pointed out what the design of the program is to pay people, even though there's no work to be done. I think they're going to want you to bring them up to their full-time, their normal visit level, even if they're not making those visits. And that's why I say you may have an opportunity for bonuses here. You know, maybe you pay them a lump sum at the end and you bring it up. Or if you don't, because you just can't afford that and you still need this money, you need the money beyond 8 weeks. And you're like, look, I'll pay what I can in 8 weeks. Great, I'll get forgiven what I can in 8 weeks, but maybe it's only half of what I receive. I need the rest of that money and I'll take it on a 2-year 1% note. Then do what you have to do. And this is why I say it's so important to get help with this or to meet with your financial advisors or experts or your CFO or whoever it is that can help you plan this out. One answer is not going to be the right answer for everybody. So I'm afraid the answer is going to be they've got to be reestablished to full level, but there might be an argument that you didn't decrease their pay rate, you only increased how many visits are getting paid for. So we don't know yet. I know that doesn't really answer your question, but that's what we've got. What qualifies as an employee? Are these only full-time or also part-time? Excuse me, I'm sorry. I'm thirsty. It includes everybody. So it includes your part-time, full-time. That's why they're going to do an FTE count. And on the idle loan, they didn't define. I did a head count, although all of my people are full-time. I think my clients that applied for that really more did just a head count. Again, the piece of the idle loan that we've applied for so far, we don't even really know what that is. There's no information. We know it's not the full loan process. And what we found even with the PPP loans is we supplied original information, and then the banks came in on the PPP. It was the banks that came in that verified everything. And so if we didn't do the employee count correctly in the beginning, because for instance, what we did, because a lot of what we applied for, we did before it even opened up, it wasn't defined. We did average employee count, so average FTE over 2019. Some people did their 2019 W-2 count. That was horrific, and that's bad because you terminate a lot of people during the year and they get a W-2, so that's not your real employment count. But we used 2019 numbers. Well, then clarification came out to use 2020, February 15, 2020 count. So when the bank physically was processing the application, we were able to update some of those. So it does include full-time and part-time. It does not include contractors. Let's see. Can we use stimulus money to replace 8-year-old computers, and can we replace a company vehicle need for staff to do visits? I think you would have a very hard time to make that argument. Again, I'm going to go back to planning, but you know, maybe, I mean, it depends on what your revenue is. For instance, if you get a lot of relief to carry your existing costs and your payroll costs, and you're still able to bill for services and you're still able to provide services, maybe you take some of your normal reimbursement because you've got PPP to cover your payroll and rent, and maybe you get the stimulus money to cover any additional expenses. Well, you still have your revenue set over here. Maybe you can use that to replace some of your computers. That is not what it's designed for. So you would have to have other revenue, your existing revenue, to help out with that. I don't think you could justify stimulus money to cover some of those other expenses. And I would, maybe you didn't ask for this, I would hold off on that kind of capital expenditure until some of this settles down a bit more. We just don't know how long it's going to last yet. But what about our aides that are not PRN, they are hourly and not being allowed? So not PRN, okay, do we pay them even though we don't have a task that we are paying them for? Again, we don't have guidance. The way the PPP loan is structured, they want you to pay them. The only penalty you're going to have for not paying them is it's not going to count as your payroll cost. It's not going to count as your workforce being reestablished, and it's not going to, your salaries will be in question. Meaning it's going to jeopardize your forgiveness, but you're still eligible for it. So that's a decision that you're going to have to make. Now, what I see some companies doing, they're getting creative. Can you put those aides to work doing something? Can they be getting training? Can they be online with administrative tasks? Is there any marketing they can be doing for you? Maybe they can help out with your social media campaigns. Get creative, think outside the box, or just know that it's not going to be forgiven. Again, they're still eligible, you just may not have as much forgiveness. Each pay period total amount is different. Which one do we use to calculate 75% of payroll compared to after getting the loan? We do not know. We do not have any guidance on this. We are in a very special industry where, well, so are the restaurants, right? Their payroll is all over the board probably too, but we don't know, and we don't know how they're going to calculate this 75%, is the employee at 75% of their prior salary. We don't know how that's going to work out yet. Again, this is what we're waiting on guidance from. I will say, because I didn't mention it, in the PPP regulations, it says that it's all got to be, so the workforce and the salary level all have to be reestablished It literally says by 6/30, so by June 30th. However, if you've already been funded, that your 8 weeks is going to be over at that time. But what the regulations state is 6/30. So maybe you've got even more time to get them all caught up. We're being conservative and saying the end of the 8 weeks, but we don't know yet, right? We don't know. And maybe they do extend it out. With this next round of funding, we're hoping there are some more clarifications as well. Are you allowed to pay for visits that have not been performed? Yes, you can pay. You can just pay them even if they're not able to go out and make visits. It says, is this allowed with Medicare? Previously, it was considered fraud to pay when no work was being done. I, I'm not going to argue with you on that, but I've not ever seen, I don't know. I don't think this is going to be considered fraud. If they're not providing care, you can, so they're not working, can you still pay them? I mean, I think that kind of gets stretched into like related parties and paying people that way, you know, just paying people to have an expense on the cost report. I totally get that that is fraud, but I think this is going to be an exception to those kind of rules. I don't have any official guidance on that. That's just my professional opinion. If you cut payroll checks on Friday and are funded by PPP on the following Monday, do you think the checks? No. Again, there's no guidance, but what we are going by on what date do you use. So if you get funded for PPP on Monday, but your payroll check date was last Friday, that one won't count. But that's okay. You're going to get 4 payroll checks in no matter what. I mean, unless you are on some funky pay schedule. You're going to get 2 months of payroll in. I've tried to slice it and dice it because if you're biweekly, May is there, depending on which week you fall on, there are 3 Fridays in May that you will pay. Like I have 3 paydays in May. I was like, oh, sweet. Does that mean I'm going to get an extra one? You know, but I couldn't make it work. Whatever you do, you're going to have to be consistent. And so what we've decided to go with is the actual check date. There was a great article. It was really long and it does nothing but bring up more questions, but it brings up questions like these because the way it reads, it says it must be incurred and paid. Well, how do you know, your pay period probably ended 2 weeks ago, but pays today. I mean, if that's the case, then we're really going to get screwed out of some payroll cost. But to answer your question, my safe bet is you need to pick one or another. Either your pay period end date is what you're going by, or your check date is what you're going by. But you can't do, I would not advise the date the check clears. I would not advise the date the payroll is funded, like if you use a payroll processing company that funds 4 days early. So you've got to pick one. You can't switch around. I would either pick the final, pay period end date or check date. To me, check date's way easier to go with. Let's see. What if PRN employee is getting partial unemployment? Yep, that's where we're at. And they're probably getting quite a bit on unemployment if they're getting that extra $600. This is what the restaurants are facing. Nobody wants to go back to work because of that. So if they're getting partial unemployment and you increase their pay, they technically should be disqualified from that unemployment. And you would have to report that to the Unemployment Commission that they are back on full staff. So all starts getting super gray. Do you forfeit forgiveness on the entire amount if you reduce one employee's salary more than 25%? That is a really good question that we do not have the answer for. I hope the answer is no, it's not defined. I hope it is a pro rata. If you decreased one employee, is it pro rata? But we don't know. It doesn't say it. Whereas on the other one, on the maintaining the FTE count, it's very clear that it only decreases your forgiveness by that amount, by that same proportionate amount. So like if you decrease workforce by 20%, it decreases your forgiveness by 20%. On this salary reduction, it does not say. Again, this is where I'm being super conservative. I would do whatever I would rather lay somebody off and pay them zero than reduce them more than 25%. Now, if they are high income earners, your owners or executives, and you're slashing those, that it doesn't count until it's below 100,000. Okay. But again, just think about it. If you've got one employee that's going to jeopardize possibly your entire forgiveness, lay them off. Reduce your workforce. Let that be 1% reduction, or let it be, maybe they're 20% of your workforce, let it be a 20% reduction. Don't run the risk of, because you reduced their salary 30% and you couldn't eke out another 5%. Again, this is where all that planning comes in. Does the tracking start for the stimulus money from the time you receive it, or does it go back prior? Another really good question. The stimulus money doesn't have any time frame tied to it. So I feel like if you've got, but I don't know if it'll let you justify, hey, I got $200,000 today and I spent $10,000 on PPE 2 weeks ago. I don't know what they're going to do there. My conservative stance, which, by the way, those of you that don't know me, I am not typically super conservative, but on this stuff, we're just worried about what they're going to change their mind on. So we're being very conservative. My conservative stance is I wouldn't try to claim that as part of your stimulus payment expenses. We'll have to see what guidance comes out. So far, there hasn't been much at all on the stimulus stuff. That is all the questions that I have. If there's nothing else, I'll go ahead and, one popped in. If you have an employee that has voluntarily terminated, can you replace them? Yes. It does not have to be specific employees. It's just a head count. It's not even a head count. It's just FTE count. So let me explain that a little bit. So first of all, let's say it's an office staff. They volunteered, they quit. That's fine. You can absolutely replace them with somebody else. There are a lot of people looking for jobs right now. And then in addition to that, let's say that you had a PRN person that did, 20 visits a week, or, they just worked part-time, and they really dropped down to nothing and they kind of quit, and you didn't replace that head count. However, one of your other PRNs is like, I want to work, I'm not scared, and you gave all their visits to that person, you're still servicing the same number of payroll hours, just with fewer head count. And so really you're kind of trying to maintain your same payroll hour, because you can think of FTE as it's basically your payroll hours divided by number of hours in the pay period. So as long as that doesn't decrease, then you're still good. I know it's all confusing. And I hope I've clarified more than created more questions, although I'm not certain that that's even possible. So with that, I will go ahead and sign up. Brandy, do you have anything else to add before we?
No, just thanks for joining us, everyone. And thank you so much, Amy, for doing this. I think that it's cleared up a lot of misunderstanding about the loans, and we would appreciate any updates that you receive. I can send them out to everyone, or if you have their email address, just send updates that you find the answer to some of these questions would be terrific.
I can definitely do it. Information is coming at us so fast, I can't even absorb it all. And by the way, like, I'm reserving weekends starting this weekend to do cost reports. They're stacking up on me. My team is doing them, and I'm like, I got to get them reviewed. But it is coming at us fast. So anything I get, I'll just forward it out to you guys to make sure. What I would say, and I thank you for bringing this up, is please read your email. And if you're on my email blast list, I'm not putting out junk, and I know you get inundated with junk mail, but we're just trying to put out more information. So I ask that you read it and hopefully there'll be something good in there for you. So I appreciate everybody showing up as well, and I'm here to answer questions. And last question said, will I send out the slides? Yes, I will do that. I'll work on that over the next few hours, getting the recording uploaded to YouTube and a follow-out email with the slides and everything, so that we'll have that out to everybody shortly. All right, thanks you guys. See you later.
Thanks, Amy.
You're welcome. Bye-bye.
Bye.